Welcome to the Wall Street's crossover show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to reintroduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how the devil are you, sir?
Yeah, not too bad.
Much going on in the markets today?
A fair bit, to be honest.
Is it all about Greece again?
Well, I mean, that's in the background. We had headlines yesterday afternoon saying a deal was all but done, and then it was denied, and this suggestion that they'll default on the IMF came up again. Today, as I was leaving the office, more headlines on the tape suggesting a deal could be done as soon as Sunday.
Yeah.
But I think you believe it when you see it is the honest answer. It's not over to the fat lady things they say. And if ever there was a case for that statement, I think this is it.
Understood. OK, we've got a number of slides to go through. Let's kick off with the first one. Data released over the European session. What's caught your eye this morning?
Well, I mean, a couple of very interesting figures from Spain. We've talked about how Spain is, something of the dark horse of European economies, and it seems to be leading the recovery. And here's further proof of that in terms of GDP data for Q1. And here we're looking at a year-on-year read, so the first quarter 2015 over the first quarter 2014, and we saw growth of 2.7%. Now, the market was looking for 2.6%, so it's not a complete surprise, but it's certainly ahead of that, and again, a better read than we saw in the prior quarter. So small increment,
it's encouraging.
but it's heading in the right direction.
Yep.
2 quarters of.
Take that in conjunction with the retail sales.
Yeah, well, absolutely. That came out today as well for April. And again, we look here at the year-on-year data, up 4% versus the 2.6% forecast. So that's very impressive. No doubt there's some seasonality there with way Easter falls, etc., etc. Yep. But still, it's moving in the right direction, and plenty of other economies around Europe would like to be seeing 4% growth in retail sales year on year, as indeed would the Japanese, who published their own retail sales figures for April today, and a very poor reading they made too, up 0.4% month on month versus the forecast of plus 1.1%. Don't be fooled too much by the year-on-year figure, which we haven't showed here, but which shows a 5% growth, because don't forget that spending fell off a cliff it spiked dramatically and then fell off a cliff on either side of the introduction of the sales tax in April 2014.
Understood.
And staying in Asia,
Shanghai down 6.5%.
Yep, a big move, although let's not forget they're up 50% year to date, so they've got plenty of headroom. But nonetheless, it was a sharp sell-off, and it all started basically when the largest Chinese sovereign wealth fund started selling off banking stocks. Volatile on the way up, and no doubt they'll be equally volatile on the way down, these Shanghai-listed stocks.
Understood. OK, so let's take a look at the FTSE 100 movers. What's caught? I picked up winning and losing today.
A couple of stocks that I something of an affection for. Kingfisher, which I must say I've been bearish of over this year and been proved soundly wrong.
Massive exposure in France.
Absolutely, but they're up 3.3% this morning. Same store sales. They rose on annual figures, and profits are actually up 1.4%. So whilst that 1.4% jump in profits is not anything to get too excited about, what I think it does show is that the business is perhaps turning around, and that those of us in the market who were sceptical, such as myself, about the prospects.
Well, we were always bear. You always had a bear position in Kingfisher, didn't you?
Absolutely. But I think it's disproving us. So France is still an issue, and maybe the growth is coming from other areas apart from France. Right. But nonetheless, some encouraging signs there. And then chip designer ARM Holdings, they're up 1.7%. Their shares, which trade under the ticker ARMH in the US, were higher last night for reasons we'll come to in a moment, but they're at 1.7% today, and that wouldn't surprise me if that gain was improved upon over the course of today and tomorrow. Understood.
OK, so let's talk some M&A, rumours and movers. What's caught your attention?
Well, it was a rumour, but just as we're about to come on air, it's come to fruition. So Broadcom is going to merge with Avago. That's BRCM in the US and AVGO, the relative tickers there. We mentioned Avago recently when we looked at the chip sector. We linked them with Xilinx a couple of weeks ago, but actually they've plumped to merge with Broadcom. So as I said, they're emerging more likely than takeover because the companies are similar size. With the new group will have a combined cap of between 67 and 70 billion dollars, and it will have an expertise in a wide range of product areas. Mobile networking, home electronics and telecom chip markets, all of those. In terms of price action yesterday, when the rumours broke up after hours, Broadcom were up 21.8%, and Avago up 7.7%. Avago's been the acquisitor here, and it has been acquisitive in the last 18 months. What I think is interesting, though, is not just the jump in the prices of those individual shares, but the broader Philadelphia Exchange Semiconductor Index, or SOX as it's known, and that moved 3.9%, and we're back to levels here not seen since Feb 2001. So I doubt that's the last of the M&A in this sector in 2015 and early 2016, and I would have thought that that SOX index and the other stocks in this sector are very much ones to have on the radar.
Understood. Okay, so let's take a look at US data points to keep an eye on today. Have we got much to look forward to?
It's another quiet Thursday, I'm afraid. Regular weekly jobless claims. So here we're looking for 270,000 jobless claims, as opposed to the prior read of 274, which was higher than expectations. The trend generally has been lower. So a figure at 270 or below would continue that. If it's wildly divergent and above that, then perhaps that will give us cause for concern. The other big figure is pending home sales. This is a measure of home sales that are basically where people have signed a contract, so deals about to be done, and it's on existing homes rather than new homes. Looking for a small increment, up 0.08% against a prior read of 1.1%, and then. And I have to be careful how I say this.
Yeah.
Minneapolis
Looking forward to this.
Coacher Lakota is
Well
speaking.
done.
He's a Fed governor. He's speaking at 2:45. He's going to talk about the economic prospects for the US. That's 2:45 Eastern Standard Time. So that's 7:45 in the UK. So
Understood. Hawk or a dove, we shall see.
indeed.
Okay, let's move on to the US pre-market movers and some chart levels.
Well, it wasn't all rosy in the world of chip manufacturers, semiconductor manufacturers. So I thought we'd look at one called Semtech, SMTC, the ticker. They make very specialist chips for industrial processes, but they had poor results and poor guidance. And as we know, the market really detests weak guidance, and so they're down 6.3%. But it could be worse. It could be a coal stock, and I picked on Arch Coal here, ticker ACI US. They were down 12.1% yesterday. Citi said that it's survival of the fittest for this sector, and that's the second bearish comment this week on the coal sector. So very few friends for the coal sector, and I suspect again, that's a trend that's going to continue.
Understood.
And then we're looking at in terms of levels.
And these are the cash levels, aren't they?
Yeah, cash levels as far as indices are concerned. So in terms of FTSE, 69.64 is our downside level. We're looking for a move above 7,050 to move to the upside. We're not so far away from that at the moment. In terms of the DAX, just a slight tightening of the range really. 11,680 to the downside, 11,820 on the upside. S&P, no real change. We've left 2,100 even as the downside level to watch for its round number value, if nothing else, and 21.25 the level to break above to have another go at new all-time highs. Similar story in the Dow, 18,035 we've left in place as the downside level, and 18,230 is the area to watch to the upside. And currency-wise, slightly wide the range here in euro dollar, because I think it's trying to make up its mind what it wants to do now. 108.65 on the downside and 109.60 on the upside. Obviously, if we do get some news about some definitive news about Greece, we should see a move, and presumably a positive one, but we won't take that for granted. The Aussie dollar continues to look a bit friendless, probably more about dollar strength than it is about the Australian dollar itself, but 76.20 our downside level, 77.40 is the upside level to watch. And then dollar yen, the yen continuing to weaken, 123.13 we've put in as the downside level today. We've slightly moved level up in the upside, went from 124.20 to 124.32 now, the level to watch for a further breakout. But as I said yesterday, we're already at at levels we haven't seen for 10 years. And in cable, 153.34 on the downside, 153.97 on the upside. So again, really searching for a bit of direction or directional cue of some sort, I think there.
Right. Worth noting on the FTSE, 70.50. We talked on the live show earlier, 7,100, a breakthrough there. Primary trend through Colin Twiggs's charts, suggesting 8,000.
Yeah, well, why not?
There's the thought. Okay, that wraps up the Wall Street crossover show. Darren Sinden, market commentator, Admiral Markets. Thank you for that. Now, you're not joining us tomorrow, are you? So, dare I say, if you fancy coming on the show and being a trainee, Darren, love to hear from you. We'll see you tomorrow at 1 o'clock. Thank you.